I bet you've been there too, noticing that the stock market gapped up or down overnight and wondering, is there a way to profit from this? Hey, it's Rosh from SpyTomorrow.com, and in this video, I'm going to share with you what is gap trading and how it works, tips for successful gap trading, considerations for setting up your own gap trading strategy, and tips for managing risk when trading those gaps. With overnight gap swing trading, you make fewer mistakes and gives you the opportunity to make money overnight with less stress. And you may ask yourself if there are signals to figure out which direction it might gap up or down, and if it doesn't go your way, is there a way to protect yourself? Traders play the gaps all the time, whether day trading or overnight swing trading. There are a number of opportunities. You can focus on specific stocks, you can look for different stocks with technical analysis, or you can focus on an ETF and overnight swing trade that, expecting the market to move during the off hours. The fact is, most day traders fail, and it's not because they're incompetent. There's a lot going against them. The market makers, big money, as well as, their emotions can often get the best of them. And that's one reason I like playing the overnight gap, because once I put in my trade, I have to wait until morning. I can't make mistakes or let my emotions get the best of me. But of course we wonder, are there things we should look out for? And again, is there a way to protect ourselves? Because you're not trading during the day, you have more freedom and less stress during the day. However, overnight trading can offer some downsides, and that is the fact that that gap could go the wrong direction. So you need to have a plan to protect yourself, and that usually includes some sort of a hedge. Now, we use SPY trading formulas, which basically is that overnight swing trade, and of course we put in protective calls and puts in case the market goes the other direction. Type in SPY trading and you'll find a number of videos on different SPY trading styles. There are a couple of ways you can approach this, and the first one is the one that I recommend, and that is finding a stock or an ETF that you can follow and really get to know. Understand the price action. Understand what happens during specific news cycles or different points within the earnings period or whatever it may be. You understand how this stock moves. And some people will trade this during the day. They know it works within a range. And so when the stock is down to a certain point, then they're going to buy a call. And when the stock is up to a certain point, then they buy a put. Now, you can do this over a few days or months or even a year if you want, but many day traders will do this throughout the day. The overnight gap trader is playing the gap. So knowing how much your stock or ETF is going to move on average is really important. And then you can play that gap up or down. But of course, you're going to need a signal. Now, some traders have a signal that they find effective. And so what they do is they go find a stock that's in the position of the up or down move based on their signal. Now, what I do is I work overnight with the same ETFs over and over. So I plan that it's going to go up or down, and I use my signal, which is the SPY Tomorrow signal, and that points a direction, either up or down for SPY, which also includes the QQQ and the IWM, which generally move the same direction. Now, you could use other stocks such as Apple, Google, or Amazon, or Tesla, which are prominent parts of SPY or the QQQ. And maybe they move much more. Maybe they gap up or down even more, such as Tesla. But you have to know your stock well and watch it and use your signal day after day so you really get to know what most likely will happen. The best way is to continuously test using paper trading first, just to see what might happen, and then start off really small and start to build over time as you gain more confidence. As I mentioned before, some traders like the hunt. They like to find stocks that fit their indicators. However, there is a danger side to that, because if you don't really know that stock well, you don't know if it's going through a period of inflation or deflation. Let me share what I mean by that. There are three main influences to a stock option's value. The first one is the value of the underlying asset. The next one is time, and the third one is volatility. And volatility can make that premium go up and inflate or deflate as volatility goes down. And the same thing can happen with time. More value, less time, less value. That's why options that are about ready to expire are much less expensive than options that are out 6 months. But when it comes to volatility, news, for example, or earnings can play a role. And the value of those options can go up during those time periods and then crash down right after the news or right after earnings. So you have to be careful. You need to know your stock well before you trade it. And that's another reason why I like to trade ETFs such as SPY, which represents the S&P 500. It's highly liquid, it's traded often, and that means I can get into a trade and out of a trade quickly, and that can be really important when time is of the essence. As far as signals go, you can certainly still use earnings and news. I'm just saying use caution. However, you can use other technical indicators such as the MACD or RSI. Consider using price action and volume. I like to use my SPY tomorrow indicators, which basically just tells me up or down. The thing is, with overnight gap trading, you don't have to be right all of the time. You could be right 60% of the time, 70% of the time. And the thing is, if you're using a hedging system, a protective option system, such as buying calls and puts in certain ratios, well, then you could make money even if your signal is wrong. Hey, do you take advantage of overnight gaps? Let me know in the comments below, and I'll see you in the next video.